Hello, everyone. Stocks on Friday had another very solid showing, but once again, not that great. The biggest problem continues to be the below average volume. It finally ticked up across the market, except for the Dow Jones Industrial Average. But as you can see, the Dow Jones Industrial Average is getting near those December old highs here. It's also near the 200-day moving average. And as it's moved up here, we finally had a sell-off on an up day where we did not sell off from the high of day on an up day. It's the first time that's happened in this uptrend. So it's possible that we're going to start running into resistance. And don't forget, we're overbought considerably. And I'll show you a few oscillators here in a little bit. The NASDAQ also, as you can see, kind of a churning session, the way that it churned. Finally, we get above average volume outside of this one day here that really kind of started off the rally attempt. But as we're doing it, the market's not closing strong. And as you can see, from where it opened to where it closed, kind of went nowhere. Has kind of a feeling of churning considering how overbought and extended we are. And we're also getting near these old highs in 2016. So obviously, we're going to run into some resistance. The Russell 2000 also, as you can see, for the first time during this entire uptrend, except for these 2 days, you can see how it's been closing its high a day, the way it goes up. Finally, Russell 2000 had some strong volume on Friday, and it closed off its intraday highs. So overall, we're starting to see some hints that via the price and volume action, along with the overextended market, that we should expect a pullback here. But, just because we're overextended and overbought doesn't mean we can't get further overbought. We could easily take out the 200-day moving average before we reverse back lower. And if that happens, that'll probably set up an extremely impressive shorting opportunity. And that's where I'll look to really hit the market if it can do something like what it did here in December. Again, because I'm sorry, I don't feel bad that I'm underinvested in this rally. I'm only 15% long. I've been really careful with long positions because a lot of the technical setups are so volatile, V-shaped, sloppy, have the wrong volume characteristics that to be heavily long any name here without the ability to follow it all day and all night long just seems really silly on an end-of-day trend following basis. Day trading intraday is still great. I mean, SDRL on Friday off the intraday highs around 750, 724 is when the short call went out. Thing got all the way down to below $5. It's just, these kind of moves are really setting up for, look at the X, even its intraday reversal. Just some amazing intraday opportunities continue to present themselves that do not present themselves on an end-of-day basis. But like I said, we're getting overbought. Show a few different charts here. This one is the New York Stock Exchange McClellan Oscillator. As you can see, we're at levels that we haven't seen since 2004. But as a quick reminder, in 2004, when we hit those overbought levels, you can see that the market just continued to go up. So it's kind of irrelevant, but it does just give you it does tell you how overbought we are. And since volume isn't confirming this move, it's probably not a good sign overall. Here's another chart. This is the top one, though, RSI. Williams %R. You can see it's very overbought here. These are stochastics, as you can see on a more shorter term basis, the 933. You can see very, very overbought here. And then, of course, the 200 and 400-day moving average, which I don't follow, but I see by a lot of people is really good at signaling whenever a very bad market is in the process of unfolding. So whenever the 200 goes below the 400, and so you also have that. And then the other oscillator, this is the overall McClellan oscillator, and as you can see, it's at levels it hasn't been seen since 2008. And as you know, even then we had the sell-off that led to the March 2009 lows. So just don't think that this has to happen or that has to happen. Keep an open mind here. We could easily get more overbought, but we're so overbought now that we should expect a reversal in the short term. And in fact, we should expect this rally attempt maybe to even fail at some point. But it's March. Don't fight the seasonality. If we can pull back on lower volume, there are so many potential stocks out there that are setting up consolidation patterns. Really quick, I'll just go over some of the names that I flagged because we have no new long positions because it just wasn't. There's still problems out there. The setups just aren't perfect enough. Like MITK, it's below average volume on this move. It's a nice breakout, but overall, it's not, picture perfect. If you look at an arithmetic chart, you can see it's still really in its consolidation area, and it's kind of volatile compared to how it was trading before this December pullback started. So we just have a lot of that out there. LG pocket pivot point signal, but this current base has had a few fake out moves, and of course OGS shaking me out. Back here in IDA shaking me out of half of it, and then another half of the remaining half that was still on here. It's just, still a tough market to get long. But I also flagged SCVL off that 50-day moving average, SPWH. That's an interesting move. But once again, if you look at an arithmetic chart, oops, pressed the wrong one, you can see, we're not really dealing with like a super clean base. I mean, compared to how it traded before and compared to how it's trading now, it's not tightening up, it's loosening up. That's the opposite of what you want to see if you're expecting a big, long, sustainable uptrend out of a breakout. Similar situation, but MTN's a little bit better. You can see that it's a little bit tighter, but in this market, I want the 20-day moving average to be touching price. That's why I wasn't interested in Cray's attempted breakout yesterday. XRS is finally pulling back, getting near there, so I'm still very interested in that. But you look at OCLR and you just see that some of these names, they're just defying any kind of market downtrend. It's been quite impressive. But OCLR remains on my radar, but as you can see, it's still not touching 20-day moving average. And like I just showed you, Cray. But another name that was setting up that then failed, Calm, CALM. That was another high quality name, and as you can see, kind of ate it really hard on Friday. So it's a tough market to be too bullish on, despite the overbought extended rally. BG&E, thinking about hopefully if this thing can base sideways, I can set some buy stops right above either this high day or maybe a breakout to an all-time high, because if you would have done that on EDIT, this is even if you chased the all-time breakout high, you'd still be up 64% and way under half of a month. So that's quite impressive for that move to happen over such a short period of time. And then also FSLR, thinking about setting up buy stops. I'm going to do it here in the next few days because it's getting more and more right. The 20-day moving average isn't touching price, but if it continues to consolidate for at least a couple more days, I'll be looking at setting buy stops at least above 73.71 on FSLR. But just you look at moves like HA and you just see how difficult this market's been, because I don't know how you buy this V-shaped breakout right here. You think, okay, well, it's got to pull back the 50-day moving average, give me a good entry, and it just keeps on moving up with the majority of the days on below average volume. So we just have a really goofy market here. I just wouldn't try to be too bullish or too bearish, stay neutral, but I would expect this rally attempt at some point to fail. Now, no longs, no shorts, no sells, but one cover. Netflix is closing above the 50-day moving average, so that's another 50% cover. And we'll be leaving that with just an 11% gain on margin in my margin account overnight, times 2, 22% gain. But overall, the lame returns continue. The lame market continues. Cash is still king on my end, and I believe that if we could break either way, wouldn't doubt if we continue to rally a little bit more in reverse. If we pull back here on lower volume, though, I'll be looking to buy breakouts in size if we can get some kind of clear accumulation action in this market. But right now, cash is king.